Well, let's start off with an overview of things as it played out at the NSE yesterday.
Currently, we are seeing a lot of demand on a number of blue chip counters, the likes of Safaricom, Breweries, BAT, and Equity Bank. There's equally a lot of interest on Bamburi, most of which is coming from the foreign investors who are looking to take up, who are in the market for a more cautious approach and kind of looking for a safe haven in the stock market.
Well, blue chips aside, we've also had financials standing firmly in the spotlight. That, of course, with a slew of them having put out their half-year reports already, and that's stealing much of the attention. What have you made of the reporting season in the financial space thus far?
Generally, what we are seeing right now is that there's been a reduction in loan and advances to the across the board, particularly in the likes of Barclays, NBK. We are seeing also that the customer deposits have not been growing at the rate as we have seen in the last 2 to 3 years. Generally, we are also seeing that a number of banks are striving to improve the quality of their loan book. That's why they are the likes of Barclays. That's why they're taking up a more cautious approach in terms of pushing out their business.
That having been said, let's hone in on Barclays' numbers here. I mean, they released at the start of the trading session yesterday. How did investors react to that move as they digested the numbers during the course of yesterday's session?
Despite the earnings improving, most investors I had a chat with are of the opinion that Barclays didn't do much last year. We are yet to see the fruits of the aggressive growth expansion program they set out to undertake in early 2006, 2007. Because what we are seeing is that the numbers were basically flat except for the loan loss provision, which they reduced by almost 50%, which, given that it's a management entry, it's an entry that is subject to management discretion. It casts some doubt in how the company is going to perform moving forward, say into the end of the year.
Of course, a lot of the concern with Barclays comes through the fact that we're looking at a company that has managed to enhance operational efficiencies, operating expenses staying pretty flat, but that focus on cost management, while that's there, it's not necessarily growing the business with income pretty flat as well. They are, though, managing the quality of their loan books quite impressively. I mean, taking loan loss provision down to 49%. Are you impressed by their performance in that regard, at least considering, though, that loans to customers dropped 7%?
We have to look at the quality of Barclays clientele. Barclays clientele tend to be the high-end middle class to upper class citizens of the country. So I think from the word go, they have always been very cautious in how they issue their loans. One thing we have to take note of is that Barclays did not participate aggressively as the other banks in the Safaricom IPO in issuing out debt. So by them reducing the loan loss provision, we're left wondering how bad was their debt. Now that has improved and they had to reduce it by almost 50%.
That, of course, opposed to Equity Bank, which was heavily involved in that Safaricom IPO. It's a stock that at the moment is seeing a lot of foreign interest. What's driving the interest there right now? Equity Bank, given they have embarked on a very aggressive campaign, they're trying to dispel that notion that it's centered on a certain community and a certain class of Kenyans. They've launched an initiative called Mimi in Kenya campaign that seems to be bearing fruit. That aside, they've also increased their regional footprint. They're in Uganda and they're looking into entering Rwanda and Sudan. So moving forward, I think this is a bank that is set to post very good, impressive earnings moving forward.